especially with the uncertainty. I mean, yes, the banking situation has pushed money in here, as has the USDC issues. But I think ultimately we have to remember that you're at a point where regulation is still keeping big money out, and that people are still subject to absolute fear. So when we get in a scenario where we start to see more and more panic selling in the markets, in the economy is starting to dip into recession, my guess is it gets sold across the board. So in assets, maybe gold survives in that period and doesn't dump, but even during COVID, if we remember the COVID collapse, even gold dumped. And that's where I kind of think that we're going to see the big dump on Bitcoin, one final flush down. I'm going to be waiting and nibbling kind of once we get in. Yeah, so I do think inflation comes back down by end of year. We'll probably be looking at a forward inflation rate of, let's say, 3.5%, kind of what Larry Fink was saying in his comments this morning. But I think, again, that's a problem, because the Fed is not going to be able to cut rates aggressively unless stuff gets so bad. And, we're looking at the regional banks and what's going on in Europe and saying this is really bad. But this isn't even close to as bad as it has to get before the Fed is willing to actually cut rates if inflation is above 2%. And that, I think, is scary to me because, what does it look like if it gets to that point where the Fed actually has to lower interest rates? I would say S&P sub 3,000 at minimum. In fact, per the S&P chart here, that's what I'm expecting. So I'm expecting, again, a little bit of a break lower here. We're obviously seeing downside down to basically the pre-COVID highs, which is right around 3,400. That's first stop. We're about 450 points away from that at this point. And then ultimately, I think by year end, we're at 3,000 or sub 3,000 on the S&P 500. So it's going to get worse. And this is the issue, is that, remember, the markets have been conditioned. Investors have been conditioned to say anytime we hit a hardship, anytime we get into a recession, the Fed will bail us out. The problem is we're going to get into a recession in the second half, and the Fed's hands are going to be handcuffed. They're not going to be able to bail us out like they have done in the past. Actually get to the point of cutting, we are probably in such a catastrophic event in the market system, in the economy, that's why they're doing it. So I'm thinking that you're going to have to see like north of 8% unemployment, maybe 10%, before they cut in the next 12 months. And again, I don't know if that unemployment number will happen, but we have to realize that if they start printing money again with inflation at 3.5%, where's the next stop? Is it 15%? Is it 20% before? And so they are realizing this as well. We know that you mentioned this earlier, that Volcker had an issue where he kind of lowered rates too quickly. Jerome Powell says he doesn't want to repeat that. So he's very aware of that issue that could arise. And so he's going to try to hold back as long as possible from cutting, as long as inflation's above that 3% area. Yes, and I continue to be in that camp, and it's having a beautiful move up today on the day. Obviously, fear, any sort of fear, instability. Number one, people run into the U.S. dollar right now. Number two, gold is that recipient. And weirdly enough, I know we'll get to it, but recently Bitcoin has been the recipient as well, which is really, really fascinating to see. But for me, gold is putting in a bull flag that started in 2020, and at some point this is going to bust out to the upside and have a big move up. If you look at the 1970s chart, this is the same pattern price. In fact, I'll show this real quick. So we had this start here in 2018 on the chart where we went up for 2 years to 3 years. We've now consolidated for 2 to 3 years. If we go back to the 1970s, we can see that same sort of pattern recognition during that inflationary period. Gold went up for 2 years to 3 years, consolidated, and then the next rip took it from about $110 to almost $900 an ounce. Now, again, I don't think it's going to go to do a 9x or anything like that. I think a 4x, 3x is probably more in line because people have an option of Bitcoin and crypto now. But nonetheless, the history is repeating here as the inflation numbers are repeating. I think, again, if you go back to the 70s, that occurred over about a 5-year span, 5 to 6 year span. So that's a pretty darn good return. I mean, we haven't seen returns on that in gold since the 1970s. So that would be sweet. I think those October 2022 lows, which were around $1,615, I do look at that as being the low. You have a beautiful channel. We just have to break through that channel, which is around the $1,955 level. If that happens, you'll test 2070, which is that double top high. And then once that's gone, then you're going to see the money rush in. And if you think about it, right, if a recession does occur, which is the likely scenario, are investors going to still want to be in stocks with the fact that the Fed can't stimulate and get us out of a recession? What if we're in a 3-4 year recession? Where's money going? Well, the answer is there's two places. There's metals like gold, maybe silver, and then there's cryptocurrency like Bitcoin. It is slightly underpriced, but for good reason. So remember, we have to remember it's an industrial metal. So if the thinking is like mine that again the economic situation is going to slow down, well then the industrial side of demand is going to slow as well. And I think that's why you're seeing that underperformance in the near term here. But ultimately, it's still a metal, and if inflation stays high for a longer period of time, you are going to see silver rush up, and eventually it will outperform gold, like historically it has. It's just this period of uncertainty with the economy and likely recession is keeping it under wraps. I still like it as a long, though. I think for me, the pure play for being a protection player of my assets is gold. But if you want that beta, that alpha, I should say, that return, then silver is where you got to look, probably late second half of 2023. Yeah, so I think silver will likely test its highs. I don't see it breaking the $30 level this year. And the main reason for that is that industrial side. I think that keeps it from really breaking out. Now, granted, from $21.80 right now where silver is to $30 is still a tremendous return just to get back to those highs. But again, my guess is the breakout probably occurs in 2024. Yeah, so for a long time, I've been saying, hey, guys, oil is going to go down to about the $65 level, maybe as low as 63. Today, we flushed down there. And again, this was a massive dump out. If we look at the intraday, the selling was just nonstop for a large chunk of the day. We have seen a bounce back, which is awesome. But nonetheless, this is actually a level where I started to inch in a little bit on the long side of oil. And I'll show you on this chart. If I zoom out, this is a major, major technical area. We're going back to levels that were pivot points in 2019 all the way through pivot points in 2021, and we've now retraced to this level. So you should see some support here. I think, again, a little bit of an overreaction here in the near term, and I expect oil to bounce. I am long on the oil front on WTI here. And just in that note, folks, and I speak out there hoping that people listen here, that if you turned on CNBC or you turned on these stations, everyone was saying, you got to be in oil, you got to be in oil services and Exxon and Chevron. And what was that? That was the top on those stocks. So I always caution people is like, do your own research. Don't just go by what the talking heads are saying. And it's even for myself. When I say something, don't just take it as gospel. You got to do your research, do your analysis. Now, for me, I think oil has a technical bounce here, but by second half of 2023, I think we have another leg lower as the economy spins into recession. So something you mentioned, which you can't help but smile at it, is that the fiat system, the banking system, is actually helping make the case for why Bitcoin is a necessity here. And I think that that's something that we have to all kind of take note of, and then also say this is a major step. I think we're going to look back at this period and say this is one of the key moments why Bitcoin is now such a major asset in 5 or 10 years from now. So ultimately, do I think that the selling in Bitcoin is over? No, honestly, I don't. I think that in the short term, the fear in the banks caused a lot of money from banks to go into Bitcoin as a safety play. I also think that we saw USDC decoupling over last weekend. People said, hey, I don't even want to be in stable coins right now, so I'm going to go into Bitcoin as well. So I think that was kind of the reason for this latest move. I think once the financial system comes a little calmer, then you might see Bitcoin head down. And I still worry that if I'm correct that the S&P is going to drop another 25% or so from here, then I do think it drags, just by fear, it drags cryptocurrencies lower overall. Now, long term, I'm a huge bull on Bitcoin, and I think I get classified as a bear because I've talked about a fall since 69,000. But long term, I still love it. I think it's the future of the digital gold world. And I think that there's a real need, and we see it today. There's a real need for Bitcoin. Yeah, so I think you have to be looking at in the course of this year, by the end of the year, I likely think we'll at least hit 12 to 13,000. And the basics of this are that, number one, we have to still wait for regulation. So especially with the uncertainty, I mean, yes, the banking situation has pushed money in here, as has the USDC issues. But I think ultimately we have to remember that you're at a point where regulation is still keeping big money out, and that people are still subject to absolute fear. So when we get in a scenario where we start to see more and more panic selling in the markets, in the economy is starting to dip into recession, my guess is it gets sold across the board. So assets, maybe gold survives in that period and doesn't dump, but even during COVID, if we remember the COVID collapse, even gold dumped. And that's where I kind of think that we're going to see the big dump on Bitcoin, one final flush down. I'm going to be waiting and nibbling kind of once we get in that sub 15,000 level, all the way down to 9,000 if it gets there. In the near term, right? So based on what's going on in the banking system right now, it actually has had a little period of this is a safety play to put money into Bitcoin. But if you look historically at Bitcoin, it's gone down when the stock market's gone down. And I think that isn't fully decoupled yet. I think we're seeing these flashes of what Bitcoin can be, this amazing asset that is a protection asset against other issues in the global sphere, but it's not quite there yet. It's still an immature, right? It's a 14-year-old, so it's a teenager. It's wild, it's crazy. We have to be ready for that. And I do think when the S&P, if the S&P dumps as much as I think, Bitcoin will get caught up in that selling. Remember, a lot of these assets, there's kind of cross breeding, meaning that as we see stocks drop, they're going to be margin calls, and they may have to be met through selling some of crypto. So it kind of all gets caught up in that scenario. So Bitcoin ran into a ton of resistance. We can see again on the chart here, the high from August of 2022. That's exactly what we've hit over the last couple days here, as well as about a month and a half ago. And my guess is what we're going to do is we're going to come down and test this level of two major trend lines that coexist here at around 18,200. That's going to be a technical bounce level, no doubt about it. But if we break that, then we head to that 15,600 level. You break 15,600, and then the next stop is that 12 to 13,000 level. So again, my projections are showing that eventually that will happen, likely by year end, and we should revisit that 12 to 13,000. I think the 10,000 break to 9,000 would be a case of the all-out bloodbath that would actually put in the bottom. As you think about how many people probably have stops right around 10,000, and that break point would create max fear, which actually is how bottoms are made. Yeah, so right now, right, I mean, if we look at inflation and what it's been over the last 12 to 18 months, and then what Bitcoin's done, we see it's definitely not a hedge, right? It's definitely not. Bitcoin has come down from 69,000 all the way bottoming out to 15,600. So that's not the case at this point. I do believe it becomes that asset in the future once we get regulation in there, we get transparency and all these other things. But yeah, right now that's not the case, even though it's showing glimpses of what it wants to become. Like, think about this, right? You have a 14-year-old and you go out on the basketball court, or you go out and they show you a couple glimpses of being a superstar, but they're not a superstar yet. So Bitcoin is doing just that. It's got to mature. It will mature, and it will be that superstar down the line. For me, the crypto winter could be longer than the past, right? And the concept there is simply that the Fed's not printing money. So again, we look at every past winter, the Fed has always been doing quantitative easing, or interest rates were going down. We're not seeing that. So right there, you have to say, okay, I have to be open to the possibility this winter may last longer. And then again, the key is, you're right, the regulatory issues. You talk about Signature Bank, and like basically what that would say to me is, don't mess around, because if you need help from the government and they're investigating you already, they're liable to make you a scapegoat, or at least, make an example of you and shut you down. And I think that's the key. So I mean, I think that ultimately the regulatory stuff, there's so much speculation, there's so much craziness. I just want to know the freaking rules, right? Give me the rules and I know how to play the game. And right now we don't know those rules. And so it makes it very hard to allocate large percentages of any portfolio to crypto when you don't know the rules. I think Bitcoin can be. I think Bitcoin is here to stay. In fact, I think the recent issues with the banks has even put it more kind of in the DNA of the financial system now, where people are even more into the trusting of what crypto brings to the table. Now, when you look at some of the altcoins, a lot of the altcoins have to go away. They don't have a lot of use case. I think there's a lot of shady stuff that we still don't know about them, but that's where the regulation to me needs to come in. Bitcoin, honestly, I don't think the regulation is going to touch it too much, aside from reporting and taxes and this other stuff. But for the altcoins, that's another story. I'm not so in tune with investing long-term in altcoins, maybe Ethereum a little bit, because I think that has a business that's really fundamentally inbred in the crypto markets. But with Bitcoin, that's the pure play right there. The digital gold, that's the one that long-term I feel most confident in.